Hello and welcome to our special program of Econ Talk, China Mid-Year Economic Outlook. I'm Guanxing in Beijing. Well, China just released key economic data on this Thursday. According to the NBS, China's GDP grew 12.7% in the first half of this year, as growth slowed to 7.9% in the second quarter. We also got some other important gauge of China's economy, including industrial production, fixed asset investment, retail sales, etc. So to interpret these numbers today, we have two economists with us. Joining me in the studio is Professor He Ping from Tsinghua University, and he's also chair of the finance department of the School of Economics and Management. And we have Dr. Hu Yifan joining us via video link from Hong Kong, and she is the Regional Chief Investment Officer and Head Macroeconomics APAC of UBS Global Wealth Management. Welcome to the show. So, Dr. Hu, let me start with you. Well, it seems the GDP growth in the second quarter is a little bit weaker than expected, but people are saying that the triple R cut by the central bank last week got investors prepared. Your take on that?
I think for the second quarter GDP, actually it's just slightly below the consensus, but it's still pretty good at 7.9%. So that makes the first half GDP growth rate at 12.7%. So if we take the 2-year CAGR growth, so it's actually increased from 5.0 in the first quarter to 5.3% in the second quarter. So I think overall speaking, I think for the first half for the GDP growth, like overall is driven by the exports and also recovery of the manufacturing and also consumption. I think that went well. But at the same time, we also say for the recovery is uneven recovery. We say like for the exports and also for the industry side actually beat the expectation for over like 10 months. And however, for the consumption side and also investment side, actually the pace of the recovery is slower than expected. So I think that for the triple R cut last week, I think it's mainly try to support the real economy as well as for the SMEs. So I think that's quite in line with the data announced today.
And Professor He, what do you think about these numbers? What do you take heart from and what concern you?
I think we need to differentiate temporary factors and the long-lasting factors to interpret these growth numbers. I believe the export increase probably is due to the pandemic around the world. So they have a strong demand for Chinese.
Pent-up demand.
Yeah, have a strong demand for Chinese products. And so that kind of drive the export growth unexpected, beating the forecast. But the other parts like consumption, investment, grow slightly slower than the manufacturing or exports related to exports. And I think we're still in a way on its way for full recovery yet. So I believe the next 2 quarters for the rest of the year will have a stronger growth on the other parts other than the exports.
And Dr. Hu, what do you think about the recovery momentum? Do you agree with Professor He that we're going to have some strong momentum going forward? Or some people would argue that the economy is slowing, the recovery is slowing. If you take a look at industrial and investment figures, there's some kind of softness in it, isn't it?
Yes, comparing with the first half, we expect for the second half growth will between 5.5 to 6% of the growth. But that's for the first half, we know it's because of the low base effect. So if we take the 2-year CAGR growth, so for the first half will be 5.3% and the second half will still be above 5.5%. So it's largely, we're still on the trend of the recovery. Comparing with the sectors, so in my view, I think for the second half, the consumption will catch up. Because for the first half, as we know, the pace is slower than expected, mainly because of the drag of the auto sales due to the chip shortage, because of some mini lockdowns in some provinces. So that's all a drag down the consumption. And also for the service sectors, actually we currently is only at the 80% of 2019 levels. So we think that because of the vaccination spreading, so we think the vaccination will help for the service sector to recover. So on the other hand, as Dr. He just mentioned, we also have the difficulties like for the manufacturing and the exports. And the exports for the first half did very well, but we also know like we also noticed the rising commodity prices, surging freight costs, and blacklogs. We also like spot some recovery of the trading competitors. So we think that actually for the exports in the second half could be weaker than expected. So I think the second half, the dynamics will be different from the first half.
Mm-hmm. And Professor He, you seem to have confidence in China's consumption power going forward, but since the recovery from the pandemic, it has been lagging behind. So why are you confident that China's domestic demand will pick up?
I think the consumption as well, the service sector will have stronger momentum than the first half for the second half. And because I think we have a very good control of the pandemic in China, and over time, there's the service sector will have a full recovery, and correspondingly the consumption will grow as well. So again, we are on its way to a full recovery. But for now, I don't think we have a full recovery yet, in particular for the service sector.
And what are other potentials?
I think there are many new directions for Chinese economic growth in the future. For example, the Industrial 4.0, and as well as the new service sector innovation, along with the digital economy development. There will be new business models, new service, new products, online, offline, combined together. So there will be a lot of new things going on.
Well, let's talk about the rising inflation at the wholesale level. It seems a warning sign recently. Dr. Hu, do you think inflationary pressure have peaked, and how will it affect economic growth in the second half?
Okay, so I think that's very different from the US side. Actually, China's CPI inflation actually kept relatively low. So for the June data, actually, we have the 1.1%. Actually, it's down from the 1.3% in May. So for the second half, we think the inflation will be higher than the first half. It's on average, it's between like 2.5%. So that make the whole year is around 1.5%. So still very low. So for China's like the inflation actually reflected in the PPI inflation. So the PPI inflation actually peaked in May. So that's like about like 9%. So we already have 8.8% in June. In the third quarter, we think it's still will keep toppish because of very lower base last year. It's almost like a minus like a 2 to 3% last year, and also because of the rising commodity prices. So for the third quarter, we think the overall like the PPI inflation will also start to ease. So overall speaking, I think the CPI inflation should not be like become a concern of the central government, and the PPI inflation should actually gradually go down starting from the like fourth quarter. And also, like in our view, for this kind of the currently, definitely we have because of the high PPI inflation. So there's some pressure for the midstream and also downstream manufacturing. So that's why the like rate cuts come out to support the manufacturing and SMEs in the for the mid and the downstream.
And Professor He, do you think that inflation at the factory gate could be passed on to consumers in the future?
It will be in the future. Right now, I think the commodity price rise dramatically because there was a quantitative ease by United States in terms of very expansionary monetary policy drives up the commodity price. And the Chinese PPI will certainly be affected by this commodity price rise. And in the future, will pass on to the CPI. So we need to have a very careful lookout for this.
And what do you think about other risks of Chinese economy in the second half? Some analysts flag the risk of rising debt level. Do you agree with that?
I think the debt level is not the major issue. I think the financial system probably has some potential risk while it's when it's transformed into a new form of financing for firms, because the old model, a lot of firms, big firms with the endorsement of government, they will borrow heavily from banks, and they actually the banks do not actually produce a lot of information. But these days, the government start to withdraw their endorsement for firms, even for those state-owned firms. So the banks do not, if banks do not produce information, they don't know how to lend to these firms. We see a lot of defaults of or restructuring of some big firms, even some big state-owned firms. So you can see there is a transition for the financial system, and the government trying to step aside from the financing process. They're trying to make sure the banks will produce information by themselves. But in the transition, banks still learning. So we will see some deleverage for firms. So again, I said it's not the problem of debt. It's the transition period that the banks need to learn how to produce information to make sure they will allocate resource efficiently.
Mm-hmm. And Dr. Hu, what do you think about the debt issue? And do you think the government will make the priority for the second half of the year?
Yes, I think actually I agree with you. I think for the macro leverage actually is a concern of many investors because last year we achieved 2.3 of the positive growth. Probably that's the only big economy register for the positive growth, but at the cost of the rising macro leverage. So based on our estimate, our macro leverage actually increased from 270% of the GDP to almost 295% of GDP. So this year, I think the control macro leverage probably is also one target of the central government. So recently, we see also the policy is more like a targeted easing to support the real economy and SMEs. But at the same time, I think that the policy will keep tightening on the property sector and also for the local government lending facilities. So that's all try to control the macro leverage. Although the government don't have explicit target, but we think that that's probably control the macro leverage within 300% is the target. So for the first half, because of the very rapid growth, so I think that's not a very big issue. But as we just said, for the second half, the economic growth will slow down to 5.26%. In this case, I think the leverage will become an issue again. So I guess if the government continue control the lending to the property sector, for example, on the guidance of 3 red lines, we expect there might be some defaults coming out for the second half, including the LGFVs. So that could be some volatility factor for the second half, just mentioned by the Professor Hu.
Mm-hmm.
Thank you.
Well, Professor Hu, you know that China just surprised the market a bit by lowering its RRR. So in terms of financial policy, what do you think about China's policy stance in the second half of this year? Will China turn to more dovish monetary policy? And the U.S. Fed is turning hawkish. So what will the divergence do to exchange rate, capital flow?
I think the reduction in the required reserve ratio is a forward-looking expansionary monetary policy to release long-term fund to the market, expecting that the economy is kind of slowing down or it didn't reach its full capacity. Mm-hmm. I think the divergence between Chinese monetary policy and the U.S. monetary policy will become normal in the future. Chinese economy is big enough, and the U.S. economy is also very big. So we have very different business cycles, and we don't have to follow each other's monetary policy.
So we have more independent policy?
Yeah, we will have more and more independent monetary policy.
Mm-hmm. And Dr. Hu, what do you think about the long-term growth potential of China, especially considering a more complicated, or even some would put it more treacherous external environment and a threat of decoupling?
Okay, so for our side, we are quite confident for the China's GDP growth for the coming 10 to 15 years. So currently, according to the government's target of the double GDP by 2035, so that means we have the implicit GDP growth for 4.7%, like for the coming 15 years. So that means if we keep this growth, potential growth, and then the US side, the potential growth is between like 2 to 2.5%. China's GDP will exceed the US, become the largest economy by 2030. So from that side, we are very confident. And also, I think there's two major sectors attracts a lot of attention, global attention. I think one is the consumer side, because with the China's GDP continue to growing, and also with a large base of the population, and then our GDP per capita is also increasing as well. So according to our estimate, by 2030, the China GDP will reach about 20,000 USD. So that means like the China's middle class will exceed about like 400 million. So that's actually even larger than the US population. So the consumer side, consumer-related sectors will be very popular for the investors. And another side, I think that for China's growth is also driven by the tech, including this kind of 5G, fintech, for the data improvement, and also for the a smart infrastructure. I think also will be the driver for China's the long-term growth.
Mm-hmm. And Professor Hu, you mentioned that Chinese economy is not at full capacity yet. So what can be done to further tap into the potential?
I think we need to have a reformed financial system to make sure the resource can be allocated more efficiently.
It's not efficient enough
yet.
Yeah,
as I mentioned earlier, the banks need to produce more information about firms instead of relying on collateral or endorsement of the government. So we need to have a more efficient banking system. That's number one. Number two, we need to have more diversified direct financing in the system to make sure firms can get financed not only through banks, but also through other type of financial intermediary, as well as directly from investors. So that's the second part. Number three, we need to actually make sure the fintech will become a very disruptive innovation for the financial system to improve the efficiency of the financial system, also complement to the old system to make sure our financial system will become a much more efficient one than before. Because in the new stage of growth, we'll heavily rely on innovation, technology innovation, and which means the financial system need to be efficient enough to make sure this innovation can be funded.
And they hope we can recover from this crisis in a better and stronger shape. Well, thank you very much for your insights. Professor He Ping from Tsinghua University and Dr. Hu Yifan from UBS Wealth Management. And that's all for this edition of Econ Talk. Thanks for watching. Until next time, bye for now.